What is up, guys? My name is Hassan, and welcome back to another dividend investing hashtag good investing. When we talk about good investing, we talk about companies with little to zero debt. So today we're going to give you a stock analysis video, a value company that has zero debt, and why you should buy into it, or more like why this might be a good opportunity to buy. As always, I have to give you guys a quick disclaimer before we get started. And disclaimer is that I'm not a financial advisor, nor do I know you personally or your financial situations. I'm not responsible for any of your gains or losses in the stock market. My suggestions are only suggestions. That does not mean you go out and buy these stocks. It is just a place for you to start your own due diligence. At the same time, in terms of a Muslim investor, in terms of a Islamic perspective, that I'm not here to certify if a certain company is halal or haram, meaning if it's permissible to invest or if it's impermissible to invest. Another key thing I want to point out is that we shouldn't randomly follow all these YouTubers and then complain like, oh my God, why am I doing so bad, when we just started just seeing someone else buy it and they bought it too. So what if, my question to you guys, say if you were to follow all my suggestions, what if I sell that company? What would you do after finding out that I sold the company? Are you going to sell that company? So it's really important that you guys do your own due diligence. And another thing I want to point out is that another disclaimer is that all the information that I present to you guys are not mine. I get them from other people, videos, books, articles, 10K, 10Q, magazines, various research articles. The only thing that might be mine is maybe my emotion and my experience. That being said, let's get started. For me, investing is very simple and easy. I have a very specific, unique strategy called long-term dividend investing, where I focus on companies with little to no debt. So here we have our Robinhood portfolio. I have about $15,300, and then you can see on the right, I have a couple of holdings of a couple of companies. So here we can see that for one day, I'm down about 2%. And then if we look at for 1 week, I'm up about $24. And then if we look at for 1 month, I'm up about 14%. So the company that today we're going to be focusing on is called Skyworks Solution, ticker symbol S. We can't see the ticker here, so the ticker symbol is SWKS, Skyworks Solution. We'll talk about some few key factors, such as, so Skyworks Solution is currently at $92.87. It has a market cap of 15.7 billion. So like, for example, if you were to buy this company at a whole, you would have to pay $15 billion or $15.7 billion to acquire this whole company. This is pretty much a tech company, and their PE is about 19.4, which I would say is a fair value because of the market pullback. They have a earning per share EPS, which is nice, 4.7, and then they pay a dividend paying about 1.76. This shows that they're not paying out all their earnings and dividend. They keep some of it for it to continue to grow its company. So what is Skyworks Solution? Skyworks Solution. So here we're going to talk about it. And this article really breaks it down, what type of company it is. It's like a tech company that makes microchips. So we're going to go scroll down here. It says Skyworks Solution is best known for suppliers of chips in Apple iPhone. So we all know what the iPhone is, and they pretty much make chips for them, but they're quickly expanding into other markets because they don't want to be heavily invested into the iPhone. What if everybody stops using the iPhone, or there's a new phone or a new company that takes over and they're not buying as many iPhones as they're used to? So that's why they're trying to diversify their way into other markets, such as home automations, driverless vehicles. Its productions are increasing in technology companies for innovative ways. In other words, they're also working on 5G. So a little bit more about them. Skyworks Solution is semiconductor specializing in supplying chips in in markets including mobiles, automotive, broadband, wireless infrastructure, home automation, and in the military. Here, they do it somewhat make chips for the military, which I don't agree because we have morals as an investor. But besides that, it's pretty good. They make chips for wireless, which is like 5G. So pretty much this is a company that makes chips for various things, not just the iPhone. So when I do my analysis, I'm going to take you guys back to Yahoo Finance. We already covered some basic information where we said that this PE is 19.44. It is a fair value. So we're going to go on to the financials and we're going to examine this company a little bit more in depth. So first thing I like to do is look at their gross profit or look at their revenue. Is their revenue increasing? 2016, you can see 3.2, 3.6, 3.8, and 2019 there was a decrease eventually. Overall, their revenue is, if we scroll down, their revenue is increasing for the most part. We can see it a upward trajectory, even though 2019 was a little bit down, but I know in the future, hopefully, this company will continue to grow. So the next thing I like to look at is their gross profit. Is their gross profit is increasing? Yes, perfect. Another thing that why we like this company so much is because of their little to no debt. So here we're going to look at their interest payment. For example, here we don't see anywhere where it says interest. That means that this company is not paying any interest. As an individual, I use my credit card, but I never pay interest, or I try not to. For the most part, almost all the time, I never pay interest because it's a waste. You're giving away extra money for no reason. And this shows when a company has little debt or no debt, that means that it is a very well-run company. Just like how as an individual, I don't pay no interest, I wouldn't want a company that I'm investing in to waste money on interest on borrowed loan to grow their company. I'd rather have them grow a little bit slower, but using their own money to reduce my risk as a investor. So here, another key, there is no, when a company has no debt, this shows that it's a very well-run company. So the next thing I like to look at is, so we're looking at their balance sheet. Next thing we're going to do is go on to the balance sheet. We covered income statement. So we're going to go scroll down and we can see here, we're going to look for debt. If there's any debt? No debt. Another thing I like to look at is the amount of outstanding share or the common stocks. We can see it right here. So here we can see it was 46,000, 45, 44, 42. The company is buying back shares. So this is a positive sign because, and this is a good sign because I'm getting a bigger portion of the pie. As the outstanding shares decrease, my ownership increases. So I want to show you guys back to the Robinhood portfolio, where here you guys can see that I have Skyworks solution 4 shares. So I'm going to click on it, and just to show you guys that, because I'm not a person who actually talks about investing, I actually do it. That's why I'm showing you guys the 4 shares that I have. Eventually, as time goes on, I will be buying into the shares. So we can see here in the 1 day, it's down about, for 1 week, it's down 2. But if we look at for like 3 months, for the 3 months, we can see that here at one point it was at $127, $128, and currently it's at, we can say, about $92. So for $95, this shows that it has come down significantly in the last 3 months, even with this pullback. And this is a very good buying opportunity after you guys do your own due diligence. So now we're going to go back to Yahoo Finance to continue on with our analysis. So far, as we're going down the checklist, it's meeting our criteria. It has a good PE. It has no debt. The company is buying back shares. These are all positive signs. The next thing I like to do is look at its cash flow. So we want to see if their free cash flow, if it's increasing or not. So we're going to scroll now. We can see that they are paying dividends, which is a good sign. And then if we continue scrolling down to where it says free cash flow. So we can see 900, 1.1, 800, 9. Okay, so free cash flow, it's a little bit shaky, and then it's decreasing. So it's like increasing, decreasing. It's more cyclical here. Normally, we would want the cash flow to increase year after year. So the next part of my analysis is that we're going to go on to a different website to verify these data and to seek to get a better understanding of Skyworks solution. So here I went to Seeking Alpha. It shows us the price, dividend yield about 1.9, and has a, this is a great part that there's a payout ratio is 29.4. So this shows that they have a lot more room to grow, and here their dividend growth rate is 5. Their dividend growth is 5 years. So for 5 consecutive years, they have increased their dividend year after year, and they pay on a quarterly basis. So guys, at this point, I want to pause the video for a second. I want you guys to call. I want you guys to make sure you guys are subscribed to the video. Subscribe to the video. Check out my other videos, because this eventually will help reach out more people, help my channel grow, and I can be able to help out more people, give people a better understanding on how to value a stock. So next thing I like to look at is their dividend yield. Am I getting, currently at $95, am I getting a value deal? Dividend yield, as we talked about, is 1.95. But in the last 4 years, their average is 1.5. So this shows that the dividend yield is actually higher than the 4-year, and this is an example of we're getting a value deal. And then one of the last things I want to show you guys before we end the video is that if we look at the dividend history. So this is the dividend history. For the most part, we can see that it is increasing year after year, which is a very good sign. Guys, if you guys haven't subscribed yet, guys, subscribe to this channel. As always, thank you. See you next time.